Welcome to today's market report. European stock markets are seeing opening cautiously higher on Thursday, helped by an increase in German consumer confidence, but held back by fraught Sino-US tensions, while coronavirus cases continue to mount. At 7 o'clock this morning, DAX future contract in Germany traded 0.3% higher, FTSE 100 in the UK rose 0.3%, CAC 40 in France climbed 0.7%. Germany's GfK consumer confidence survey came in better than expected earlier on Thursday, suggesting that Europe's largest economy is slowly recovering from the coronavirus pandemic. The forward-looking consumer sentiment index rose to minus 0.3% in August, better than the minus 5 expected and the minus 9.6 thing in July. It has gained almost 23 points since its low of minus 23.1 points in May. There is no doubt that the reduction in value-added tax has contributed to extremely positive progress, said Rolf Burkel, consumer expert at GfK, explaining that consumers are looking to make major purchases earlier than planned, which will help boost spending this year. The stock market gains, however, may be limited by rising tensions between Washington and Beijing after the United States ordered the closure of China's consulate in Houston amid accusations of spying. The two largest economies in the world have been at loggerheads for a month now over such matters as the region of the COVID-19 outbreak, the legal clampdown on Hong Kong, and China's ambitions in South China Sea. At the same time, the coronavirus continues to ravage its way across the US. California has now overtaken New York, the original epicenter of the outbreak in the US, as the worst hit state for cases, according to the Reuters tally. Today, cases in the most populous U.S. states rose by 12,112 on Wednesday, the biggest single-day increase since the pandemic started. In corporate news, Daimler will be in the spotlight after the German car manufacturer said it still expects to make an operating profit this year despite the hit from the COVID-19 outbreak, which resulted in large second quarter operating costs. Corporate news from the likes of Pernod Ricard, STMicroelectronics and Roche are also due. Oil prices edged higher on Thursday with the jump in U.S. crude inventories reported late on Wednesday, having only a limited impact. U.S. crude futures traded 0.3% higher at $42.02 a barrel, while the Brent contract rose 0.2% to $44.39 a barrel. Gold futures rose 0.5% to $1,873.95 per ounce. On the FX front, GBP USD keeps 127 level despite China Brexit headlines. The pair flashed the least move on Wednesday in a week, and the same fashion continues so far during the present day. While searching for the reason, changes in the market's risk sentiment and Brexit headlines join UK's optimism concerning the coronavirus could be traced as the key catalysts. Additionally, London-Washington combat with China and uncertainty over the US stimulus adds worries for the pair traders. The UK Express reports that the Tory leader Johnson ordered the British Army to prepare for 4 major disasters this winter, which could simultaneously devastate the UK. The list includes COVID-19, Brexit, flu, and flood catastrophe. Johnson's spokesman said on Wednesday that the UK has not put a specific time frame on getting a trade deal with the United States. On the other hand, the US policymakers are jostling over the much-awaited fiscal plan, with uncertainty over the extension of unemployment benefits and the size of the package given in the latest challenge to the risk-on mood. Eurodollar has been taking a pause from its surge just under 116, while Thursday's 4-hour chart is pointing to mildly overbought conditions. The dollar index was down 0.1% at 94.808. This is today's market news. Thanks for listening. We'll see you next time.